Hello everyone and welcome to the Laptop Trader. Hopefully you dig the new updated, more colorful logo. Took me forever to change that. Again, this is Phil at the Laptop Trader channel on YouTube, and welcome to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. So we're going to cover in this series just like the basics of being a stock market trader. We're going to cover market cycles, stocks, and ETFs, including technical analysis, trade entry, trade management, risk management, some look at some of the fundamentals of companies, and how to create confidence by putting the odds in your favor. So good luck. You're welcome to contact me, laptoptraderphil at gmail.com. So quick caution, most stock traders lose money, so please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. So please seek qualified help if you need help investing or if you need help with your finances or budget. Okay, so let's get to it. Again, this is how I look at the market. I look at the market in 4 stages. To me, it looks like the shape of a big bell. So Wall Street rings the bell when introducing new companies to the market being traded. This is kind of what it's a real basic representation. Again, excuse the artwork, but this is just a technical view of the 4 stages. You've got stage 1, stage 2, stage 3, and then stage 4 or downtrend back to stage 1. So this channel is for different levels of investing, and it's for anybody that wants to learn more. Okay, so if you're at 0, you're a new investor, new trader, it's okay. You're welcome here. If you're level 10 and you don't need me, you're also welcome here. Who knows? We maybe could learn something from each other. So this is just a little bit more what these 4 stages may look like if you're using a chart, using a line chart and a moving average. The green line would be just a moving average of price over any period of time. Again, you can see the stage 1, 2, 3, and 4. This is what it may look like without a moving average on a line chart. So we've got the different names for the 4 stages, okay? So you've got stage 1, which is generally considered a stage of indifference for maybe a new product or a service or a company. Many times you can see accumulation in this stage or consolidation. Then as buying picks up, we go to stage 2, often referred to as the greed stage. The emotion of the stage would be greed, which starts an uptrend. Okay, then we get to stage 3, where we've reached kind of a plateau, if you will. Another consolidating area, you see more selling taking place in this area, or distribution stage. You see, hearing these words on TV, that's what they're talking about. And then finally, we have stage 4, where the selling really picks up. We go into a downtrend, and the primary emotion of this stage is fear. And then at the end of that cycle, a product or service goes out of favor, a company goes out of favor, and either goes out of business or the stage starts all over if the company is viable. So you can see this over and over in the markets. So we'll get more into that. That's my thesis, okay? This is a reverse of that stage where maybe a good company was punished along with the other companies and was sold off. And then it came down to stage 1 again, and we see accumulation taking place. And then we go back to a stage 2. I think about maybe large companies that were sold off along with everybody else in 22, and now they're being purchased again. Maybe something like Apple company or something like that. Okay. So this video series is going to be a little bit repetitive on purpose because trading is repetitive. So we reviewed the 4 stages for you. So when I look at these stages, I'm not using a line chart, okay? I'm using a candle chart. So green candles are generally buying candles. Red candles are generally selling candles. But it depends where they happen. The context of that formation of these candles matters. So we use candles because we get a little more detailed information than a line chart. Not hard to read. I'll let you guys, I'll leave this on for a few seconds, but basically you've got a high and a low range of the candle, including the wick of the candle and the body. And then you've got the main difference between green and red is that green opens at the bottom of the body and closes at the top of the body of the candle. In other words, price is moved up. And a red candle is the reverse. It opens at the top of the body of the candle, and then it has a range, and then price will close at the bottom of the red candle. So suggesting prices move lower in that time frame, whether it's a minute, an hour, a day, or a week, it doesn't matter. So these candles work in all time frames. So when I use this, I have a bias time frame and an action time frame, okay? This is just kind of the main setup I look for when I'm looking to buy a stock. It's the reverse if I'm looking to sell a stock or short a stock. But this setup gives me a high degree of confidence. Again, context where this takes place matters quite a bit. I call it a 3-bar turn, okay? So I'll leave that there for a few seconds, let you guys just look at that. We try to keep this video to about 45 minutes. That's why I pre-prepared these slides. So now in January, we had an overall bias of stage 4 with the first week in January being an up week. So we can see that on the charts here in a little while. This is another slide I put together for you guys. I wasn't sure kind of where to put it in the presentation, but this concerns risk reward and how a trader looks at a possible opportunity and how we look at risk. So I'll leave this here for a few seconds. You guys can review this, but basically we look at risk using a stop loss strategy. In this quick example, I'd be risking $1. If I place my stop under the first red shaded area, and if prices moved up, I'd be seeking a higher reward, like a $3 reward for every dollar invested, or a $6 reward for every dollar invested. It's a little bit different look than what a traditional investor would look at. If you lower your stop loss, as you see on the right, if you take a bigger risk, it kind of hurts your risk to reward ratio. That's all I'm showing there. This is just a quick page I put together for you guys about why trade versus investing and why use a stop loss and the difference between an investor and a stock trader. So I'll leave this here for about 10 seconds. You guys can pause and read through that. It's pretty basic. It's not next level math. While you read through that, we've got earnings season here in January and February. In general, we've seen lower earnings, lower forecasts, lower guidance sometimes they'll use, and profits seem to be coming in lower versus previous quarters and previous years. So right now, price in the stock market is showing that prices have gone up in January significantly, but earnings have not really blown anybody away. So I think that could be a kind of a headwind going forward. So let's review a few charts here for you guys real quick. This is just like an ETF that I follow called the Dow Jones Industrials, symbol DIA. And this ETF tracks, it's like a tracking stock for the overall Dow Jones Industrial Average. So this is a daily time frame. We're just looking from left to right of an area here. Stocks had sold off from. We had a double bottom, right? We use these what's called pivots as critical areas. This would be a pivot here, and this would be pivots down here. There's some pivots here in between. When this came down here and retraced back up to this level, see how that this level kind of matches this level? We call that 100% retracement, okay? So it made sense that sellers started to show up after that. That's pretty normal. And then we had this tightening range with slight appreciation of prices with sellers still in the mix. So I put these question marks here because there was a question mark as to whether this price was going to break out of this range or go lower, okay? And I'll show you a more current chart on that in a minute. That's a 6-month daily chart. That would be more of an action time frame for me, daily chart. So this is a company within the diamonds, Dow Chemical. This is a weekly chart. Okay, this is a 2-year chart. This is a chart that I would use to forecast my next move or plan my next move. This is more of a bias chart or a longer time frame chart. So this is where I would use my bias. I'm using a weekly chart for bias, sometimes a monthly, and I'm using a daily chart for my entries. That's how I trade. Different traders do things differently, but we can just see where we had this kind of area where prices kind of slowly came back and then slowly came up for this company. And here, prices kind of took the elevator down, right? And they started to creep back up, go sideways, came up, and now we're going sideways. So I'm expecting Dow Chemical, individual company, to continue this trend, the stairs up trend, up to this previous pivot point right around 70 bucks. So that would be my target. If I entered here, I would expect it to move up about $9 to $10 in price. So that's what I'm looking at on this chart of a weekly forecast. And so you can see these targets on these longer forecasts. Again, we're using these pivots as targets, and we're using these bottom pivot areas as reference points also, okay? So it's not too bad when you look at that. So that was my forecast time frame or my bias. Now I'm going down to a 3-month daily time frame. And we can see here, if we had entered on this day right here where the purple arrows are, it'd probably be a pretty high probability trade based on the longer time frame, the weekly time frame. And we would have a fairly low risk stop loss under the same candle. Now, if prices continue higher as we expect, then immediate profit is close, right near $62. So if we entered at 60, let's say $59 or so, not 59. If we entered near 60, over that candle at about $60 and maybe 25 cents or $60.30, we can see just if we get a normal range candle, we're not too far away from 62. That would give us a pretty good risk to reward within a day or two, or about a 3-to-1 risk to reward just on that small move. So that's what we're looking at as a trader. And I'll let you guys read through that. I'll wait for a minute, catch my breath, take a drink. You guys can read through that. We also have, because we're in earnings season, something called valuation and how companies are valued. So again, I put this slide back in. I probably should have taken out the other one, but this is a more appropriate place for this slide. So sorry you guys get to see that again, but this goes together with this slide here, the daily chart of Dow, and how we're looking at risk. Okay. Again, I'll leave that there for a few minutes, and then you guys can pause it and review. And so most of my videos are going to concern how can we use markets, ETF charts to see what is moving up or down relative to each other, and how that information can assist us in our forecast. So here's a NASDAQ ETF, referred to as symbol QQQ, very popular ETF, but it tracks the overall NASDAQ index, which is more of a tech or future industry index. So growth companies with more growth prospects in that index. So I just drew this on here for you with a pattern of our 4 stages. And on this monthly time frame, you can see kind of what stage we are in now. So the first week of February looked pretty good as far as a monthly view goes, but I think we're probably still in a stage 1 area. Okay, so that's how I look at that. This is a weekly view of the same ETF, and it kind of, for the most part, matches the monthly view. So that confirms that, yeah, we're probably still in, stage 1, late stage 1 area. Okay, even if prices kind of move up out of this area a little bit, it's hard to fight the momentum sometimes of these stages. So just be aware of that. So here is more of my action time frame. So we have the forecast, the bias time frame. Now we're down to a daily time frame. The daily time frame is given a little bit different picture of a possible early stage 2. Okay, with our buy setup right here. So we had this triple top pullback, nice big rounded pullback here, and then we kind of had what I call the 3-bar turn right there. The colors can change, but generally you have a red bar, a red or green bar with lower low, and then the third bar will kind of engulf the first 2. Okay, and then after that, prices kind of broke out of that area. The problem with this is that we're coming up to this triple top resistance right here around about 301 or so. So even if that pushes through 301, this is quite a move. January's been quite a move, so kind of my forecast for February so far is break these areas, but then pull back. Okay. Now I'm going to go to the next thing I want to show you guys real quick. Okay, is the current end of the week here on Friday, February 3rd, so that we can see some updates on some of this stuff. So, because it took me quite a while to put together that slideshow. So here we've got a weekly time frame, right, of the DIA, Dow Jones Industrials ETF, and we can see we had a very strong January. Okay, actually this isn't January. This is actually going back to October. So the Dow Jones Industrials were moving up and have been moving up since October. Had a slight pullback recently, December, and then kind of continued up into January. Now, this first week of February, we get this kind of not inside candle, but closed right around the top of the previous candle. So it's kind of a neutral candle right there. That's why I say kind of expecting a little more of a pullback in the overall markets. So let's go to a different one here. It's going to be, let's look at this ETF, SPY, which tracks the S&P 500 index. Okay. And we can see there we've got similar movement up from October, pullback, and then in the first 4 or 5 weeks of the year, we've got this real strong move up. Okay, with a closing green candle above these other candles that actually closed higher than this red candle. It's come up above the moving average. This is a 50-period moving average, which I like to use. But we can also see the downtrend is kind of still intact too, where we got this pivot, a lower pivot, and another lower pivot. So the question is this going to become at some point another lower pivot? And that remains to be seen. But that's a very strong candle to end the week here for the S&P 500. Now let's look at the QQQ index ETF, QQQ for the NASDAQ ETF. Again, we have a very strong January, right? Weak December, strong January. First week in February, quite strong, going above the moving average, going above this pivot here, this area, kind of closing around this area where prices had sold off before. Again, this is a pretty big sell-off here. So we're coming into an area of where sellers had been at before, and now we've had the strong buying. Well, sometimes you get strong buying followed by some strong selling, or at least some selling. So that's what I'm expecting here in February, especially with earnings being kind of weak. So let's go to a few more. These are my top 5, okay? The diamonds, Qs, SPY. Then we've got this ETF which tracks the Russell 2000, which is more broad-based index of 2,000 stocks, symbol IWM, okay? Again, this one has actually been stronger than the others, really strong since January and into the first week of February. Look at that candle, really didn't even care about these previous areas of price resistance. It went right through it and closed higher. So that's very strong, which is actually pretty good for the economy if these 2,000 stocks are performing that way. But again, we're coming into this area of resistance where these two candles were, okay? So we're almost there. I would say watch out for the 200 area. That's a whole number. That matters sometimes. I'm expecting some sort of pullback in the overall markets. So next, we'll do one more. This is my top 5, IYT, which tracks transportation average. So again, weekly chart. Again, we had a very strong week and a very strong January. Now it looks like February is going to continue, but again, I'm expecting some resistance at this pivot and some sort of pullback here with earnings season and just the overall economy. So that's an update on those 5. Let's get back to the slideshow. Okay. So on our daily time frame now, this, let's see if I can pull that back up. The Qs would be at what level? Qs close the week at 306.18. So when we compare that to our presentation, we are right just above that, probably around, yeah, just above that, probably right in here, okay, 306.18. And the next point of resistance is going to be right here at about 310. So watch for the Qs or the NASDAQ to hit 310 or 3,000 and then probably have some selling come into the market. It just makes sense, right? Had this big move up, 3-4 weeks in a row, a strong start to February. Some people are going to want to take profits if you want to think about it that way. Let's go to our next slide. I want to start looking at something called not only valuation, but we're going to take our bias from not only the higher time frame, but our bias from these indexes, and now we're going to start looking at some individual companies and see how they perform versus our bias and versus the indexes. So valuation for me is going to be part of that, okay? Some of these stocks are going to be part of last month's top 10 watch list. So I just continue to watch them, and then I just make my decision: buy, sell, or hold. Okay. So we can see our ZM company, Zoom Communications, that on the monthly time frame, this is a 5-year monthly chart. That price is still consolidating since November 22nd, 2022. It's been flat, moved up less than $3 in that time. So on this time frame, we're still in stage 1. We need to wait for earnings on February 27th to see where price moves to. Sometimes stocks are bought up into earnings and then sold off. Sometimes stocks are bought up after earnings or sold after earnings. So earnings is a tricky area for a trader. I'll just say that. But we need to see if earnings are growing or have declined or stalled with other market companies. So this ZM, I believe, is part of the NASDAQ and or part of the Russell 2000. So let's move on from there. So our bias long term is stage one. On a weekly time frame, it kind of agrees with that stage one of the higher time frame, and we're still below the moving average. Last earnings right here, a quarter ago, the price sold off and just went flat. Okay, so this is like 12 to 14 weeks of flat price action below the moving average. That's kind of how I use the moving average. You're not going to see a bunch of indicators on my chart. This is all you're going to see on my charts. So we had some buying pressure here. You can see the volume with a nice buying pressure, and price kind of maintained that. And then we had some selling pressure, and price immediately came down after that last earnings announcement. So let's talk about valuation quickly on this chart. Here, Zoom back in December had a value of around $2.50 per share. Oops. And closed at somewhere around maybe $2.30 per share. So when opened at $2.50, closed at around $2.30. Had earnings December of $1.11 per share. Okay, and price came down. And then the next earnings report, which earnings look back in time, they reported $1.29 earnings. So earnings actually improved from December to February of 2021. Yet price continued to kind of trend down. Okay, so remember that positive earnings does not always mean positive price movement. It does not always happen that way, and people get confused by that when they're looking at fundamentals. But the charts are true because the charts are what people actually believe with their money, and where they put their money. So that's why we use these charts. But the next earnings release, which is looking back in time, came in May of 2022, and they reported 1.03 or $1.03 per share earnings. Okay, so now that's less than the previous two. So it looks like maybe Wall Street insiders knew that earnings were going to not perform, or after it came out, that the price was going to likely come down. I don't have any forecast as to earnings, what they're going to be, but there's a lot of reporting on this stuff. You'll just have to judge for yourself how you want to look at earnings and valuation. So we can see that now price came down to around $85 per share, give or take. And it came down from $250. So that's quite a move. So we only went from $1.11 to $1.03 to $1.05. And yet price is now below 80 bucks. Okay, so that's quite the move down from 250 to 75.40. So remember that. Now this is company still making money. Now over these 3 quarters, they improved their earnings from $1.03 to $1.05, yet price went down. And then they improved their earnings a few more cents per share to $1.07, and yet price is still flat on this chart in November of 2022. So the next earnings may be critical to what happens with Zoom. So I'm going to allow you guys to research that for yourself as far as earnings, okay, and valuation. So you can see that earnings going down from $1.11 to $1.07 is not a big move, but yet the stock price moved from 250 to 75. So that is quite the percentage loss, and not a huge decline in earnings. It is a decline in earnings, but Zoom to me is still a valuable company, and I think here to stay personally. So that's how I look at earnings, okay, and valuation. So as we look past that, again, the market is going up in January. It's still going up in the first week of February. And so, I'll do this for you real quick. We're going to go here. We'll type in Zoom real quick and just see what happened this first week in February. I'm not 100% sure when they report earnings. Should be pretty soon. But so far, the first, weekly chart. So far, the end of January was positive, and the first week in February looks like Zoom is starting to move up. So in our slide, this was at 75. Now we're at 79.54. So about a 4-point increase for Zoom there the first week of February. So it's starting to follow these markets up. A little bit of a market laggard, actually. And so that helps with our forecast. So if you like Zoom, it's not a bad area to get Zoom. Again, daily Zoom, we can see here a little bit different picture. Remember, we're stage one in the longer time frame, and this shows that it's come down. Again, we've got a double bottom area, a little bit of a 3-bar turn, smaller 3-bar turn, followed by an area of consolidation. Now we have a little bit of another 3-bar turn with kind of a range expansion red bar. Came up, and then it retested that same area. Again, another 3-bar turn with a closing gap up, which started this move higher. So this went, 1, 2, 3, 4, 5 days up in a row, up to this little resistance area right here where these lines are at. See how that line matches up at about $78? So it's retesting the price. It's retesting the lows repeatedly. It's retested that lower, twice here and then a little bit higher. So it's had like 4 chances for sellers to come into this stock, into the market, and push prices down. And you can see right here on this candle, right here where my pointer's at, this candle with a topping tail and a green close on larger than average red volume. Sellers tried to push this stock down. They tried to short it, or they sold out of it and took profits, and prices continued to accelerate higher. Okay, so that is showing some strength. And another way to look at it is that, the sellers are starting to lose the battle, right? And the buyers are winning this battle between lower prices and higher prices. It looks to me like the buyers are starting to take over the stock. So let's keep on with our thesis here. So again, this is Russell 2000. This is a weekly chart, so showing the stages as I see them, how this ETF transitioned on a weekly time frame from stage 2 to 3 to 4 back to 1, possibly into an early stage 2. So again, price is just now coming above that moving average line. So that can be about the only indicator that I use. So I'll let you guys just look at that for a minute. Now, there's always the question too, as far as where do I get my ideas from to invest in? And I agree with Peter Lynch on this, who wrote a really good book. The best place to start is to start with what you know. So if you work in an industry like, let's say, transportation, or maybe you work in let's not use transportation. Let's use a medical industry because that's a little more complex. Let's say you work in the medical industry and you know of different medical providers, different insurance companies. You routinely use some of the same tools from some of the same companies. I think that's where I would start my research, is with what you know. Secondly, I think you should start with where you spend your money. So when I look at something like the FANG stocks or the MAGA stocks, Microsoft, Apple, Amazon, Google, Netflix, Meta, Facebook, Zoom, I start with what I know and with what I use. So I use Microsoft products. I don't really use Apple products. I use Netflix. I don't really use Disney or other streaming services like Hulu that much, so I use Netflix. So that's where I start, is with where I spend my money, if that makes sense, because then you can kind of get a gauge of how, not only how the company's doing, but is it a product or service that you like, which means probably a lot of other people like it too. Or you can start with where you work, right? If you work for a public company, start there, start doing some research on your own company and see if it's a good investment for you at this time. In other words, if it's good enough to work there, or if it's good enough to buy their product or service, maybe it's good enough to invest in. So that's a really powerful thing that people forget, their own experience. So this is just another view of the Russell 2000 daily ETF, showing kind of the changes of stages we're going through, the back and forth. In my opinion, this would be kind of a neutral area or a neutral chart at this time because it's had so much back and forth. Okay. Here is another stock within, I believe, the Russell 2000, maybe in the NASDAQ too, but it's a fairly small company. Parian Network, PERI. I identified this one last year because it actually broke out in February and kept going up, even though it had a little bit of a pullback into June and then went up. So it was kind of on its own page versus the market, where the market sold off all year. This one did not. Where the market sold off in went up in November and sold off in December, this one did not. So that's probably my third piece of advice for you guys as far as what to invest in. Look for stuff that's outperforming. Okay. When everything else is going down and something's going up, that's when my alarm bells go off in my head saying maybe this is something you should research. Okay. So we can take a look quickly at this chart and the valuation. And I think this was also in our top 10 list from last month. So let's take a look at here. We had right stage one, very easy to see. Stage one, monthly chart. So this is a month. Each candle's a month. They reported earnings, and all of a sudden it broke out in October of 2020. Continued higher through 2021. Had a little bit of pullback in 22, but then went up higher. So you can see increasing earnings. I put this, this purple thing in here just kind of show you how the stage, how we're still in stage two. Okay. But they had 28 cents here per share, 44 cents per share. Then it came down to 33 cents per share. And then we have 51 cents per share and 61 cents per share. So we've got growing earnings, not only over the last couple quarters, but versus the previous year. And then this company reports earnings on February 8th, so 2/8, which is next week. So this may be one for you guys to watch if you like that company, or you know that company, or you'd like to invest in the company that is at least profitable and not an overpriced stock, right? It's only $33 per share. So that's a quick idea for you guys. Here's a weekly chart. This time frame agrees with the monthly chart, which is something I definitely look for. And this company is making new 52-week highs. Okay. Again, this may not be a fundamental thing, but stocks making new 52-week higher lows tend to continue to make new 52-week higher lows. So that's another sign that this company is doing very well. Here's my action time frame, daily time frame. You can see a bit of a pullback here to a stage one, breaks out and gives us this buy setup in January. I think January 23rd, where you have a little bit of a pullback, kind of that red candle, maybe an in-between candle there, and then a green candle that closes above the previous two. And then you see prices accelerated from around maybe just under 30 bucks, and now prices at 33. So nice little move there in the stock recently. Maybe one to put on your list. Okay. Then we can also talk about how we can use sector ETFs to judge not only the whole market, but a specific sector. So this is considering the technology sector, symbol XLK. This is a 5-year monthly chart. And so if you do your homework on this sector and you just look at it kind of what stage we're in now, it looks like we're still kind of stage one on this monthly chart, right? But do your homework. Don't rely on me or anyone else for your investments or your trades. Just take what I'm giving you as a course to make decisions for yourself. Okay, so that's a monthly XLK. Let's take a look at this company real quick. This is Block Company, symbol SQ. This is a 9-month daily chart. So again, what information do you see, and what information would you need to make a trading or investing decision for yourself, right? So you're going to ask in your homework, buy, sell, or hold, or not for me at this time. These are the main questions that I ask myself when I'm looking for a possible trade or a possible investment. So I'll just let you guys look at that chart real quick. You can judge for yourself what stage we're in on the daily time frame. You can research the weekly or monthly time frame if you want, research earnings, research sales, revenue, stuff like that for yourself, because you need to become reliant on your own critical thinking, right? That's what we're going to do here. This is not the channel for me to just give you guys stock trades. I'm trying to show you guys what I've learned over the past 3 years, okay? So that is Block Company. Let's go to a different one. This is Microsoft, symbol MSFT. Again, it's a company that I use their products. I like their products. And so this is a 2-year weekly chart of Microsoft, more of a biased time frame or a forecast time frame. So you can look at that and judge what stage we're in there. Okay. You can see clearly from the left, uptrend, transition to a downtrend. On this one, I'm showing you 2 moving averages, a 20 and a 50 period moving average. Okay. So how does that affect your decisions? Again, you're not going to see a bunch of indicators on my charts because I don't use them. But are you willing to do the homework and get information? So after you look at this chart, maybe you consult the monthly chart, and then maybe you consult the daily chart, and then you consult maybe some just basic financial information on Microsoft about earnings or revenues, and then in your mind, buy, sell, or hold, or not for me at this time, right? So that's for you guys to decide, but that's a 2-year weekly chart of Microsoft. Here's another sector ETF. This is the VanEck Semiconductor ETF, symbol SMH. Okay, it's a 1-year daily chart. Again, the first thing I'm looking at is what stage is this in. So ETFs don't really have earnings. They usually have some kind of dividend. They don't report earnings every quarter because they've got multiple companies within the ETF or the index. So for you, could you make a decision on this chart, or would you need more information? That's right, buy, sell, or hold based on your goals and your trading plan. Sorry, I had to get a drink of water. So here's another company that was popular, maybe still is popular, Workday, symbol WDAY, right? So here's a 2-year weekly chart of Workday. What do you see? What sticks out to you immediately? Is there anything that really sticks out to you immediately on this chart? Again, we've only got price, a couple of moving averages, and volume, right? Buy, sell, or hold, right? It's up to you. The market does not care if you win or lose. You have to make quality decisions based on information that you trust for yourself. So there's Workday. You know, is this something maybe you would like to own or maybe invest in? It's totally up to you. I don't care. Here is a daily chart, 6 months daily chart of Pinterest, symbol PINS. Is there anything about this chart that sticks out to you or that looks interesting? Or do you know Pinterest? Do you use Pinterest? Do you work at Pinterest? So you can see that prices kind of slowly move back and forth as it's slowly moved up. And I'll just share with you real quick. One thing I see on here is that we have a slightly increasing moving average, right? We've got some larger green volume, which indicates buying pressure. We've got higher lows. So even if this moving average wasn't here, I can see higher low pivots, right? We've also got a breakout candle on volume, superseding everything else. In other words, making new highs, new 52-week highs. But what's really interesting to me is how this pulled back, it broke out, pulled back, put in a big nasty red bar, and then immediately turned around and went up and consolidated for about 2 to 3 weeks. See how that range went from here, like that, back and forth, and then gapped up, closed up, and then consolidated in a tighter range. See how that range got tighter between, before we had kind of a range of this back and forth of 26 down to 22, about a $4 range. I'm not talking about the bars, I'm talking about this back and forth range. And we had a move up, we had a gigantic range expansion bar that was negated. This selling was negated, okay? In other words, we ignored all the sellers on this bar right here. We went into this tight range of about, probably $1 or less on some of these candles. So the range tightened, You don't see a bunch of volume there. And what happened out of that range is important. Well, what happened is it gapped up and closed up. If it had gapped down and closed down, I would be thinking lower prices. But because it gapped up and closed up on volume, my forecast would be for higher prices from here, okay? Again, it's making new 52-week highs. So that's what I see on this chart, just to give you an idea. But it's up to you. Buy, sell, or hold pins. Okay, now let's go to more of an established company like Coca-Cola, symbol KO. Here we've got a daily chart, 1-year daily chart, okay? So in your mind, because it's a more established company, you should not be expecting major growth in share price. So, is this a good buy price at this time? I don't know, because that would have to be your analysis. So buy, sell, or hold, right? One thing I do see about this chart is that prices have not moved hardly in the last year overall. So if we look at the left of the screen, we see, $62. At the right of the screen, we've got a closing price of $60.28. So actually moved down $1.75 since this time last year. So it's just one of them stocks that's going to go, at least in this time frame, back and forth, pays earnings, right? Pays dividends. So does this valuation at 60.28 line up with what you would expect to be a good dividend payment or a good outlook for the company going forward? So good luck. It's up to you. Here's another one I'll share with you. This came on my list because it had shown down here that we had some increased buying interest on these volumes. You can see that there's a lot more green volume, kind of some extraordinary volume to the right of the chart. But this chart is just simply to show you guys an example of a higher yield stock that pays dividends in the real estate sector. Pays an annual rate of $3.92 per share, paid out by quarter, or 98 cents per share per quarter. Currently, that equals a yield on capital, YOC, which is what a dividend investor kind of looks at, of about 5% yield. So that does not include any decrease or increase in share price. That's just the yield of the dividend, 5% yield at today's price. Okay, so when you see that, think about this. Okay, up here the price was at $130 per share, give or take, with the same dividend payment. So back here, yield would have been around 3%. Okay, prices come down toward today, it's around 75 bucks, 76 bucks. Our dividend payment hasn't changed, but the price of the stock has come down, which increases our yield. So to the left on the chart, we would have had a 3% yield. Today we have a 5% yield. So this, and the other thing that's kind of interesting about this chart is the price is starting to flatten out and turn up above this moving average. So this may be one of those stocks, not saying it is, but maybe a stock that could kind of give you the best of both worlds. Dividend, high dividend payment, high dividend yield with increasing or appreciating share price over the next year. Again, that's not saying that's going to happen, but that's kind of how what could happen. So some people chase yield. It's not a good idea to chase yield at higher prices. That's not generally a good investment idea because prices come down about not quite half price. So it's 130 to 75 is going to be about, prices has come down about, I don't know, 40%. That's a pretty significant drop in price just to hold a high yield. So if you bought up here, you're only getting 3% yield, but you've lost 40% of your value of your money in that investment. So keep an eye on stuff like that when you're considering yield. That's the point of that chart. And I just put the earnings per share on the chart for you: 91 cents, $1.42, 229, and then 78 cents. That's one thing that scares me about this company is they're paying a 98-cent yield or dividend, but this most recent quarter they only earned 78 cents per share. So that 20 cents has to come from somewhere. It doesn't come out of the cloud, right? So that is what I'll say about that. Again, be objective, right? Here is a link. I think you guys can copy and paste that. If you can't, let me know. I created this document concerning earnings and valuation of public companies. It's 3 pages. I think it's important, but I think it was too long to put into this slideshow. Maybe I'll include it in my ebook or something for you guys in the future. But if you can't get to that link, let me know. Here are a few things to consider, as this is a channel about the basics, about what are some characteristics of a good stock trader versus what does not matter, or maybe will even hurt your success in trading. Okay, so kind of what you want, maybe what is not desirable as a trader. Again, it's a different business, it's a different mindset, it's a different field. It's going to require different education that you have not experienced in school, high school, or even college, or even if you have an advanced degree. You're going to need some new skills to trade. So just a few would be patience to work through a process. If you already have budget and money management, that's a huge plus. If you have a home budget and you follow it, that's a huge deal. And maybe you don't have a bunch of money, but you've got the eagerness to learn new skills and start at your level and move up, right? So are you willing to learn, right? Are you willing to follow some rules? You have basic math and reading skills, some of the stuff you're going to need. So what does not really matter? What level of education doesn't matter? Success in another field doesn't matter. This is a different business that has a very high failure rate of trading, over 90%. A big ego may hurt you. Big title or advanced degree may actually hurt you in this business. Money is just a tool. So, different backgrounds or lack of money does not disqualify you from getting involved in trading or investing. And if you just simply can't or won't set and stick to your financial goals, it's probably not for you. Okay, just being honest. So you guys can read through that while I take another drink. So here's just a slide of some basic information you're going to have to put together, preferably on a piece of paper or in maybe electronic format, whatever you wish to do. I personally write stuff down in my journal in paper. I go over my trading weekly. So I review all my trades when they close, and I review my entire trading activities weekly. I call it my weekly game plan. So you guys may want to follow along with that. But there's just some basics: how much cash you have available to invest, what's your level of trading experience from 0 to 10, um, what dollar amount would you be willing to lose in any one day or any one trade. Um, what price range of stocks are you comfortable with? You may not be comfortable with Microsoft. You may be more comfortable with something like Perry or Zoom, right? So anyway, just want to put this up again in case you didn't catch it at the beginning. Again, I'm just here to share my experience and give back to the stock investing and trading community one video at a time. Again, you're welcome to email me. Thanks for watching The Laptop Trader. Okay, please share, like, comment, and subscribe if you guys want to continue to receive this high quality content. Here's the final slide. It's just a resources page for you guys of stuff that has helped me out over the years. Platforms, recommended books, recommended websites that I use or that I have used, and a couple of my favorite guys on YouTube. So people that I look up to or that have been very helpful to me. So I'll leave that there for a few seconds and say farewell and good trading. Bye, guys.